mid-cap end of the market, mid and small, which is holding up very well in trade. Overall, if benchmarks are slightly on the flatter side. Let's say the discussion on markets forward with Santosh Singh joining us from Motilal Oswal, with the head of research there. Santosh, afternoon. Thanks for your time. I must congratulate you on your call on insurance stocks. Last time around, when we spoke, you did outline that this basket of financials, the non-lending part, especially insurance, is undervalued. Market may not ignore it for long, and last 1 week market is taking stock of that. Do you think this may actually very well sustain a little more, the re-rating which has started after getting beaten down a whole lot?
I think still this end is significantly undervalued because say one of the reasons was because the regulations or the budget went against this sector. My view was not really that it went against, but yes, the market wants to look at news flows, and the news flow was against it. And in my view, this was not going to impact in a big way the entire sector. See, if a sector is big, it has value and this has sustained for the sector has sustained for hundreds of years, right? One regulatory change doesn't kill the sector. And I think that's what the market perceived at that particular point in time. So my view is that still nothing has happened here. We are still a long way away from what these stocks can deliver. So even if you look at some of the top stocks, right, they're still below their highs which they've reached 3 years back or 4 years back, right? So, and the market is not at the same position, and these companies have delivered more than 18-20% sort of EV growth. So I think still there is a lots and lots of value lying there.
Just checking up, Max Financials, for example, just for example purposes, the lifetime high was in July 21. It's 1 year back, and the price was almost 1150, and right now we are at 760. So yeah, they've not even scaled their previous highs, but the business has actually grown since then. Yeah. So that is one point. Today, we are also chatting on a day when International MSME Day is being celebrated. Now, MSME lenders have done phenomenally when 5-star business finance, you grow, talk of even going into slightly microfinance. What are your thoughts? This is considered a very risky space. But if numbers are to be taken last 2-3 quarters alone, even IDFC Bank, which is kind of a MSME tilted bank, what are your thoughts on this MSME kind of focused lenders? How risky, and how does the risk reward put up right now?
See, it's a cyclical, I would not say it's risky, it's cyclical, right? And for that, they get money at a much higher rate, right? I mean, they don't get money at 8% or 7%. So a AAA might get money at 7%, almost at a treasury rate. These guys are getting money at 20-25%. So companies are pricing that risk to the vast extent. But mind you, these are cyclical businesses. My only worry with the market has been that they only ride it when the cycle is at its peak, and they actually start selling it when the cycle is at the bottom. So I find from the market perspective really hard to make money out of it, because eventually if you see most of the companies, whenever they reach their bottom or top, they always come back, and they come back with a bang actually. Because the growth rate here can be in excess of 35-40%. This is a very highly underpenetrated sector with very, very high yields, and when the cycle is right, you hardly get any credit cost. So I think from the cycle point of view, we have just started. Maybe we might not have reached even the middle of the cycle. Valuations in some time might start looking stressed, because this is how this space works. Suddenly the stocks move up 100-150% in no time. So valuations may start looking less, and sometimes still it's a way to go. So I will still think that there is a lot of money to be made here. If one is a 10-year, one thinks 8-year, 10 years, I think they make a lot of money. When we start trading in these stocks, actually it's disastrous, because you generally tend to enter at the peak and sell at the bottom.
Very nicely put. It's cyclical. It may not be risky, but high growth is something which they do offer. What else are you looking at right now with a magnifying glass, Santosh? Purely on the risk reward and the opportunity which lies ahead.
So my view is, I'm slightly contra in my view most of the time, so that they'll have to take care of that. So I actually like IT a lot because I think from a 5-year perspective, this sector is going to be somewhere else. Yes, next quarter, as everyone is forecasting or is saying that it would be one of the worst quarter for IT, possible. But so are the valuations. The valuations have corrected. These stocks have not done anything for 1.5 years when the market has gone somewhere else, right? And if I look at 2 3 year or 5 year perspective, this is a space which will do really well because eventually we are in a digital world and these are the companies which are going to service the digital era. So US interest rates or US banks going through some trouble or US recession or European slowdown, these are all short-term phenomena. Longer term, these are not going to stay. So I'm getting these companies at good valuations. I don't care about what comes with in one quarter. Then I should be really buying these stocks today.
IT, contra call on IT, valuations look comfortable. And this is the bad news in the next 2 3 months, quarterly results, all of that is a good time to accumulate. Okay. Also, because you look at the economy part as well a little more carefully, Santosh, I want to understand market cycle versus economic cycle. Where do we stand right now? The opinion is one of the opinion is that the market is large part of the market is already pricing in a lot of positives, and economy is still struggling. Others say that we are superior economy versus the rest of the world, and mid cap small caps will have a field day next 2 3 years. Which side of the argument would you be on?
So let me start with mid and small cap, and I will actually totally differentiate between mid cap and small cap because mid cap index is at its all-time high, and small cap I don't know how much money we have in the last 5 years. Actually, the index I think Nifty 100 would have done hardly anything in the last 5 years. So mid cap and small cap you need to differentiate. The small cap has not done much, and small cap are the most cyclical part of the market. So that's one part of the picture. Second is market versus economy. See, economy might see bad news in future, but see, the market peaked in I think 2021 September October, right? And from there it's falling. It's still somewhere very close to September October of 2021, right? And then that was the time when the yield curve was inverted, and then people started saying that there could be a recession going forward. That recession is coming 2 years from there, but the market actually priced in way before then when the recession would come. And that we are talking about US recession. I'm not very sure if there will be a recession, but yes, if everyone is saying there will be a recession, there should be a recession. So that's one part of it. Right? Secondly, if you look at the yield curve, now it started to flatten out. Right? So maybe one in the US, maybe one or two rate hikes more, but the yield curve is flattening out. And if I'm just thinking 12 months from here, and markets generally tend to see a market on an overall basis is very, very efficient. And they are looking 12 months forward, right? If we are looking 12 months forward, we might be talking about that US has come out from the recession, Europe has bottomed out, and the interest rate might have peaked out. So if that's the case we are playing out, then even the global economy might seem to be in a better position. See, that the uncertainty of a recession is the biggest problem. It's not the certainty of a recession or certainty of a rate hike. Certainty, market prices them very fast. So that way we have some bit of certainty on that front. If I'm looking at India, right, we are almost there from a rate point of view. We are almost there. Maybe even the RBI is pointing out towards the data, but if the data is fine, then we might reach the peak. And that's what is showing in our 10-year treasury yields. So if that is the case, and the other part is that on a GDP growth front, we might start seeing some momentum going in from the next year. And markets actually, as I pointed out, have not done anything from October highs. They have not done anything. We are just saying that it's because in last 3 months it has gone up, but it has gone up after falling. So actually, I'm not really worried about the market at all. But yes, I think that next 6 months, if I think it will be a sideways market simply because you will have you will have things playing out.
Right way to play would be, hold on to your horses. If you made investment in the last 6 months, hold on because this upcycle is not even started yet. Yeah. That's what is coming from Santosh. Santosh, just one quick question before I let you go. If in the next 18 months, in which I am taking 6 months of pause by our own central bank as well, when the rate cut cycle starts, we did not hike rates in the same proportion as globally. So perhaps we will not need to cut rates in the same proportion as well. But whenever it happens, to whatever extent, how will that coincide with markets? How are markets likely to behave in the rate cut cycle?
So it's just the opposite of what they behaved in the rate hike cycle. So you might start seeing the banks underperforming, IT outperforming, insurance outperforming, and some of the NBFCs outperforming.
Excellent. All right, Santosh. Always very interesting to chat with you. Thank you so much for your time. That was